Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Bernoulli. Today we have Doug Casey. He's an American writer, philosopher, investor, and the founder and chairman of Casey Research. He literally wrote the book on profiting from periods of economic turmoil. His book, Crisis Investing, spent multiple weeks as #1 on the New York Times bestseller list and became the best-selling financial book of 1980, with over 400,000 copies sold. He's lived in 10 countries and has visited over 175. Today, you're most likely to find him in La Estancia de Cafayate, Casey's Gulch, an oasis tucked away in the high red mountains outside Salta, Argentina. And recently, he's been writing a series of fiction books as part of a series, High Ground novel series. Can you give us some insight on these series of books and which ones are out so far?
Well, Speculator is the first of the series of 7, and it charts the history of our hero, Charles Knight, who gets lucky in a junior mining stock, goes to Africa to see if there's any reality to it, and discovers a mining fraud, of which there are quite a few, incidentally, in the real world, and gets involved in a bush war in Africa with boy soldiers, and makes a couple $100 million, has it stolen from him. Second book, which is also out, is Drug Lord, where Charles gets into the drug business, both FDA regulated and DEA regulated drugs. Makes a couple $100 million, has that stolen from him too. Now, the next book that we're working on is called Assassin. But what we're trying to do is reform the unjustly besmirched reputations of highly politically incorrect occupations. Nobody likes speculators. Speculators can be good guys. Nobody likes drug lords. Drug lords can be good guys. Nobody likes assassins. They can be good guys too. And then it gets more radical in the next 4 novels. So don't fall behind, Richard. You want to get into Speculator and Drug Lord before Assassin and its subsequent volumes come out next year.
Sounds great. And what are the types or basic messages you're looking to get across in these series of novels?
I'm trying to update what Ayn Rand had to say in Atlas Shrugged, put it into a modern context, but make it practical and show people that the world is their oyster. They can do anything that they want to do. They just have to be prepared to accept the consequences.
Exactly. And let's move along into some of your recent thoughts on cryptocurrencies. How do you see that playing out? And do you see a competition with government-based cryptocurrencies? Will governments allow private-based cryptocurrencies to coexist?
Well, I first started to get involved almost accidentally in Bitcoin several years ago when I was given a physical Bitcoin, which incidentally exists, when they were worth $13. And I liked the idea of Bitcoin and cryptocurrencies back then. I could see the upside potential, the potential of them. But I had a problem with the cryptos and with Bitcoin. And that was, what's the actual value proposition? In other words, it's an electronic figment of your imagination out there in the ether. What's it really worth? Can I get stuck with it? And it was only in August of last year that I came to understand the real value of Bitcoin is as a transfer mechanism. In other words, it lets you ship value anywhere in the world to anybody without using the banking system and without using a national currency. And that's very important. And I think that the real upside of Bitcoin in the future isn't going to be so much from Europe and America and Japan. These are advanced countries. But you've got to remember that out of the 7 billion people in the world, about 5 billion of them are really poor people, some of them abysmally poor people. And if they want to save money, they have to use their national currencies, things like kwachas and pulas and nairas and pesos, which are worth little within that country that issues them and worth absolutely nothing outside the country. But all these people have smartphones now. Everybody has them. After they buy a used T-shirt to wear, next thing they buy is a smartphone. So all these people are going to start using Bitcoins. Why? Because they can save them. They've been an appreciating asset, unlike their local currencies. They don't need banks, because banks in all these third world countries are horrible. They're even worse than the currencies they have to use. And they can transfer them out of the country if they want to make the chicken run and get out of these hellholes. So maybe that's a long answer, but that's the essence of why I like Bitcoin.
But what about the government? So if government and central banks in particular are not happy with sort of a competing currency, would they not take regulatory action to prohibit the proliferation of these cryptocurrencies? In other words, will governments and central banks allow these private-based cryptocurrencies to coexist along country-type currencies?
There's no question that governments are going to clamp down on Bitcoin and the other cryptocurrencies. Governments love to have monopolies of important things. They have a monopoly of force within their bailiwicks. That's why they're governments. I mean, they want a monopoly of the currency, which is the lifeblood of society. So no, they don't want to see Bitcoin succeed. And I expect that in the future, it's going to be outlawed. And I expect that in the future, governments are going to come out with their own cryptocurrencies and are going to use moral suasion and force to get their citizens to use their cryptocurrencies, their electronic currencies instead of Bitcoin. But it doesn't matter, because these governments have tried to outlaw lots of things that people want throughout history. They tried outlawing alcohol in the 1920s in the US. Didn't work. As a matter of fact, alcohol consumption went up because it was illegal. They tried outlawing drugs and marijuana. That didn't work. The market overwhelmed them. They've tried outlawing prostitution, all kinds of victimless crimes. So they're not going to succeed in outlawing the cryptos and Bitcoin. They can't, because it all occurs in the ether. I mean, the governments don't even know what's happening, which is another reason why they hate them so much.
Mm-hmm. And how do these cryptocurrencies have and retain value? Do they need to be backed by something like gold?
Well, ideally, they should be. They should be readily exchangeable with some commodity money, which is generally gold or silver. Historically has been gold or silver for a lot of basic reasons that Aristotle defined in the 4th century BC, why gold and silver are the ideal monies. But yes, and there are some of these cryptocurrencies now that are being denominated in precious metals and are redeemable in storage facilities in various places in the world. So that's happening, yes. But as I said before, unless they're readily redeemable by the issuer with an actual money, commodity money, the main value of the cryptos, in my opinion, is as a transfer mechanism and as an alternative to really worthless government currencies, which about 2/3 of the people in the world today have to use because they're blocked within that country.
Mm-hmm. And speaking of gold and precious metals in general, how do you see that market shaping up? Are you still bullish on them? And what would be the catalyst for going higher in US dollar terms?
Well, I buy gold and silver primarily as a store of value because they're real. They're not just floating abstractions like the US dollar is. And the US government has been and is creating trillions of US dollars out of thin air since the 2007 crisis started. And they're accelerating their printing of money. They're not actually printing it in paper terms, but they're printing it in electronic terms, which is the way things are done today. So I'm very bullish on them. And why, in particular, am I bullish? Because we're kind of in the twilight zone investment-wise today, where everything is overpriced, almost everything. The stock market is in a bubble after going straight up since the bottom in 2009, late 2009. Real estate, certainly in big cities, is in a bubble, and it floats on a sea of debt, which is the third thing. With interest rates at zero or close to it everywhere in the world, the bond market's in a hyper bubble. So what's cheap? Everything can't be expensive. Well, commodities are cheap today. Commodities in general, all of them. But that includes gold and silver. So I think that a lot of wealth is going to rotate out of these overpriced things and get into commodities, and in particular, the precious metals.
Are you also bullish on agricultural commodities, and if so, why?
Well, because they're cheap. I live in Argentina and Uruguay a good portion of the year, and I actually have a cattle operation and a soybean operation and other agricultural things, grapes, all kinds of things. And the fact is, nobody is making money today growing wheat or corn or soybeans or cattle, but they're the most essential things on the face of the planet because you can't live more than a week without food. But if farmers can't make money growing food, they're not going to grow it. So at this point, most food commodities are selling at or below costs of production. That's when you want to buy them. You don't want to buy them when they're in the paper and in the news for farmers making money and people need food because you want to buy them now when they're really cheap. So I really like agricultural commodities now.
And how can investors invest in that sector? Like, what are the mechanisms?
Well, it's very hard, Richard, because you can buy land and become a farmer, but being a farmer is very hard work, and it's a lot of brain damage, and anything can go wrong. You can speculate in farming by buying the land and leasing it out, which is what I prefer to do. That's one way. Of course, you can buy wheat and corn and soybeans and a bunch of other agricultural commodities on the futures exchanges, but that's not a good idea for most people because it's highly leveraged, and most people wind up losing all their money. The third way is you can buy ETFs that are linked to these agricultural commodities, but there are more problems with that because they have to deal in the futures market and they charge fees. And so the answer to the question is, yeah, there's three basic ways you can do it that I just spelled out. But it's not easy.
Which agricultural commodities are you bullish on currently in particular?
Well, actually, I like coffee. Coffee is very cheap right now. I like sugar. Sugar in real terms is approaching close to historic lows. And the grain complex, also very cheap. Actually, the cattle complex, live cattle, all of them are cheap right now, quite frankly. Commodities all tend to move together, just like stocks tend to move together. Mm-hmm. So this is a sector of the market that people aren't paying attention to, but they should.
Can you give us an update on the status of the financial hurricane that we're in? A few months ago in our discussion, you mentioned that we're in the eye of the hurricane. When do you see a movement out of that eye? What would be the catalyst for that?
Well, as you know, I believe we entered a giant financial hurricane in 2007, and we went through the leading edge in 8 and 9 and 10. And since then, we've been in the eye of the storm. And I'm surprised that things are still as under control as they are at the moment. I thought that we'd go into the trailing edge much sooner than we did. I expected a couple of years ago that we'd start seeing financial chaos like what we had in 2008. Well, not really like it. Chaotic, but different and worse and longer lasting. But all these tens of trillions of currency units, governments all over the world have poured on the waters. It's had a larger effect than I thought. But if I was going to take a guess, it seems to me that even as we speak right now, there are indications the stock market is finally starting to roll over. And prices on real estate in places like London and, well, Vancouver, where I am right now, which has been one of the strongest markets on the planet, the real estate market's starting to roll over and interest rates are starting to go up. So, look, if I was going to hazard a guess, if we have this conversation a year from now, we're going to be back in the storm, and it's going to be unpleasant, worse than 2008.
And what would be the conditions and effects of that on the financial markets and the economy in general?
Well, since they're all in bubbles, we could see crashes in the bond market, which means interest rates could go way up. People forget what interest rates were back in the early 80s. The U.S. government was paying 15% to borrow money. So the bond market could collapse, the stock market collapses, real estate and home prices go down. And in response to that, what governments are going to do is print more money. That's all that they can do, which means that at the same time as investment prices are going down, retail inflation, stuff you buy in the store, is going to be going up. And that could be exacerbated by this trade war, which seems to be getting underway between the U.S. and a lot of other countries. So I think it's scary.
How do you see that trade war playing out internationally?
It's unpredictable because you're dealing with the psychology of political leaders, and political leaders suffer from abnormal psychology. So I don't really know how the Chinese, I don't think the Chinese are going to want to back down to the U.S. putting duties on things. In fact, they may up the ante, and Trump may up the ante. And the same is true of the Europeans. It's unpredictable. And when the going gets tough economically, one thing that political leaders like to do is blame other countries for the problem. It's, you blame those damn Arabs for oil prices being too high or too low sometimes. You blame the Chinese for filling Walmart full of cheap and useful goods. I would tend to thank the Chinese for doing that, actually. But when economic times get tough, politicians don't blame their own stupid policies. They tend to blame other countries. So these things can get out of control. It's unpredictable.
And finally, as a follower of the Austrian School of Economics and a libertarian, what are your views on the job market in terms of what could happen as a result of software automation, robotics process automation, and artificial intelligence happening in many sectors of the economy? Where will the jobs be as a result, and will there be a sufficient migration to higher value employment as a result?
Well, to start with, I've got to say that I'm a believer in Ray Kurzweil's proposition of the singularity. In other words, technology has been accelerating at accelerating rates for many, many, many years. And at this point, the curve is going hyperbolic. So artificial intelligence, it's going to happen where computers are smarter than people. But it's not just that. It's robotics. It's happening there. It's happening in genetic engineering. It's happening in nanotechnology. So that the fact is that we're going to have abundance at some point in the world because of technology. Life will no longer be solitary, poor, nasty, brutish, and short, as Hobbes said. We're going to be living in a wonderful world of abundance if we don't blow ourselves up. Now, what do you do for employment? People are talking about, well, we need a universal basic income so that, if people don't have jobs because the machines are going to do all these jobs for them, that's an incredibly stupid idea. Paying people, because somebody's got to supply the capital that it's going to take to pay the people that are going to get this universal basic income, which is part of what we're talking about here. It all ties in together. I wouldn't worry about unemployment. Why? Because everybody, you, me, and everybody else, has an unlimited desire for goods and services. You get one Ferrari, you want a Lamborghini. You got a Lamborghini, now you want an airplane.
Okay.
You want. So we all want. Now, so there's an infinite supply of things people want. Therefore, any individual can work 24 hours a day, 7 days a week, supplying goods and services to the market. It's just up to the individual to, actually do things. And giving people something for nothing because machines can produce real wealth cheaper than people, that's foolish. You have to. This is like the Luddite revolution. People said, "Oh, these weaving machines are going to put us out of business as weavers," and they did. And you don't weave anymore. You go into the city and you do something else, and the standard of living goes up. So this is a replay of what happened 150 years ago. Don't worry about it.
Well, great. We'll end on that note. Awesome insight, Doug, as always. How can our listeners learn more about your work?
Well, go to internationalman.com and separately, they're very different websites, kcresearch.com. We have a lot of free and interesting things at both of them.
Great. Thank you very much, Doug, and we'll end it there.
Thanks, Ricky.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.